President Trump walked to a podium at the White House, looked reporters in the eye, and said the United States will be leaving Iran, and I quote, very soon. He gave a timeline, 2 weeks, maybe 3. And just like that, global stock markets exploded higher, oil dropped below $100 a barrel for the first time in weeks, and investors around the world collectively exhaled. But here's the thing, we have been here before, multiple times. And every single time, the optimism got crushed within days by escalation, by new strikes, by contradictions. So the question today is whether this time is actually different, or whether this is another head fake in a war that has already cost thousands of lives, pushed gas past $4 a gallon, and wiped out trillions in global market value. Welcome to my channel. I am Bogdan Macro. And if you want to understand what is really happening in the markets and the world right now, do me a favor. Hit that subscribe button and like this video so more people can actually see this. Because what I'm about to walk you through, connecting the market moves, the oil dynamics, the diplomatic signals, and the contradictions, matters for every single person watching. Let's start with the headline numbers because they are staggering. On Tuesday, the S&P 500 surged 2.9% to close at 6,528. That was the best single day for the index since May. The Nasdaq jumped 3.8%. The Dow gained over 1,100 points. And it didn't stop there. Asian markets went absolutely ballistic on Wednesday morning. South Korea's KOSPI surged 8.4% in a single session. Japan's Nikkei jumped 5.2%. In Europe, Germany's DAX rose 2.6%. France's CAC 40 gained 2.1%. Britain's FTSE 100 climbed 1.8%. And the Pan-European Stoxx 600 rallied 2.5%. According to Bloomberg, this was the sharpest move in US. Equities in over 10 months, and the Goldman Sachs basket of the 50 most shorted stocks soared over 7%. Let me translate that. A huge portion of this rally was driven by short sellers getting absolutely crushed, forced to buy back positions as markets ripped higher. That matters because it tells you this wasn't entirely conviction buying. A lot of this was mechanical, positioning driven, and that means it can reverse just as fast. Now let's talk about what Trump actually said, because the details matter enormously. Speaking from the Oval Office on Tuesday, Trump told reporters that the war with Iran would be over in 2 weeks, maybe 3. He said, and this is critical, that Iran does not need to make a deal for the US to leave. He claimed the goal of eradicating Iran's nuclear threat had been attained, and that it would take Iran 15 to 20 years to rebuild. Secretary of State Marco Rubio went on Fox News the same evening and reportedly said the US had largely destroyed Iran's Navy and Air Force, and was ahead of schedule on all 4 military objectives. That is a significant statement from the administration. The White House then announced Trump would address the nation Wednesday night at 9 p.m. Eastern to provide what they called an important update on Iran. That announcement alone added fuel to the rally. But here's where things start to crack, because on the other side, Iran's foreign minister Abbas Araghchi went on Al Jazeera and said Tehran is prepared for at least 6 months of war. He explicitly denied that any negotiations are taking place with Washington. He said, and I'm paraphrasing here, that what Trump calls negotiations are simply messages being exchanged, and there is no formal diplomatic process underway. According to Araghchi, an end to the war must include peace throughout the entire region. And then, Wednesday morning, Trump posted on Truth Social claiming that Iran's president had asked the United States for a ceasefire. Iran's foreign ministry spokesman called that claim false and baseless, according to Iranian state television. So you have two completely different narratives being presented simultaneously. Trump says the war is almost over and Iran is begging for peace. Iran says it's dug in for 6 months and there are no talks. The market chose to believe Trump. But the market has chosen to believe Trump before in this conflict, and it got burned. Let's look at oil, because this is where the real economy lives. Brent crude futures for June delivery dropped to around $102 a barrel, WTI fell to about $100, Those are big moves down from when Brent was flirting with $120 a barrel just weeks ago. But let's put this in context. Before the war started on February 28, Brent was trading around $70 a barrel. So even with this pullback, oil is still roughly 40% higher than pre-war levels. And here is the elephant in the room that nobody on Wall Street wants to talk about honestly. The Strait of Hormuz is still effectively closed. 20% of the world's oil supply normally flows through that waterway, and right now, tanker traffic has all but stopped. Iran has been hitting ships with drones and missiles. A Kuwaiti oil tanker loaded with crude was struck off the coast of Dubai just this week. Iran's Revolutionary Guards have been charging vessels to cross what they consider their territorial waters. And Trump, when asked about the strait, essentially told the rest of the world to deal with it themselves. He said other countries should go to the strait and, quote, just take it. He told allies like the UK and France to buy American oil or, quote, build up some delayed courage. Now, separately, each of these developments is interesting on its own. Trump signaling an exit, Iran denying talks, the strait still closed, markets rallying on hopes, oil pulling back but staying elevated, gold climbing for a fourth straight session, up around $100 to roughly $4,750 an ounce. But when you put them all together, they tell you one very clear thing. The market is pricing in the best case scenario, while the actual situation on the ground hasn't fundamentally changed. The war is still raging, strikes are still happening in Tehran. Israel said it hit 230 targets in Iran on a single day this week. Hezbollah is still active in Lebanon. The Houthis are launching missiles from Yemen. 13 American service members have been killed. Iran says more than 1,700 of its people have died. An American journalist was kidnapped in Baghdad by a militia linked to Iran-backed Kataib Hezbollah. This is not a conflict that is quietly winding down. And let's talk about what this means for your wallet, because it's already hitting hard. US. Gasoline prices crossed $4 a gallon this week for the first time since 2022. That's up over $1 in a single month, which is a steeper one-month climb than anything we saw after Hurricane Katrina in 2005 or after Russia invaded Ukraine in 2022. In California, gas is already close to $6. Diesel is at $5.45. And here's the thing even Trump acknowledged. He said gas prices would come tumbling down once the US leaves Iran. But energy analysts are pushing back hard on that. The head of petroleum analysis at GasBuddy reportedly said that leaving Iran without reopening the Strait of Hormuz would be, and I'm paraphrasing here, a catastrophic failure that would guarantee higher energy prices because Iran would be free to attack vessels and charge tolls. Even a former Trump administration energy secretary said it would be highly problematic to leave without securing the strait. The CEO of Hong Kong-based Caravel Group, one of the world's largest ship management companies, reportedly warned that even if fighting stopped tomorrow, the ripple effects on shipping insurance, maritime labor willingness, and actual tanker traffic would take months to normalize. So let me walk through what the scenarios actually look like, because I'm not here to tell you where markets are going. I'm here to help you think about what conditions need to be met for different outcomes. If Trump's 2 to 3 week timeline holds, the US withdraws, and some kind of arrangement opens the strait, even partially, you could see oil drop significantly from current levels, maybe back toward $80 or $85. That would be an enormous relief for global inflation, for central bank policy, for consumer spending. Stocks could have significant room to run if that scenario plays out. However, if the US withdraws and the strait remains closed, which is reportedly what the Wall Street Journal says Trump has privately considered acceptable, then the world has a much bigger problem. Iran would effectively control a fifth of the global oil supply's transit route. Analysts at Macquarie Group reportedly put a 40% probability on a scenario where oil hits $200 a barrel if the conflict extends through summer, which could push US gas prices to $7 a gallon. That's the tail risk nobody wants to think about. And then there's the middle ground, which is probably the most likely. A messy, ambiguous drawdown where fighting slowly decreases, some ships start moving, insurance premiums stay elevated, and the world lives with structurally higher energy costs for months. In that scenario, the OECD has reportedly forecast US inflation rising to 4.2% in 2026, up from 2.68% last year. Markets are now reportedly pricing in a 60% probability that the Federal Reserve raises rates this year, a complete reversal from expectations of cuts just 6 weeks ago. I want to leave you with this thought. We are 5 weeks into a conflict that has already reshaped global energy markets, driven the largest emergency oil reserve release in history at 400 million barrels, pushed gas past $4, sent central bank rate expectations spinning, and created a geopolitical risk premium in oil that hasn't existed at this scale in decades. One statement from the Oval Office doesn't undo all of that, no matter how much the market wants to believe it does, and I'm not alleging anything improper here. I'm simply pointing out that the pattern in this war has been hope followed by disappointment, rally followed by sell-off, signal followed by contradiction. Draw your own conclusions about whether this time is different. So here's my question for you. Trump is addressing the nation Wednesday night at 9 p.m. Do you think we get a concrete announcement of withdrawal with a specific date, or do you think we get more conditional language that keeps this dragging on? Drop your prediction in the comments. I genuinely want to know what you think. And if this breakdown helped you see the full picture, send it to one friend or family member who you know is watching their gas bills and their portfolio right now. They need to understand what's actually happening, not just the headline. Hit subscribe if you haven't already, and I'll see you on the next one. This is Bogdan Macro. Stay sharp. Oh, and before you go, YouTube thinks you might enjoy this video next, so let me know if they're right.